presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock, you and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time on Thursday, and we got markets flirting with records yet again. I can pick up a recording to begin the program every day, man. But nonetheless, we back off a bit. We're right now up 13 points. We're about 10 points away from the all-time highs that we hit within the last hour, and you have the S&Ps in positive territory. NASDAQ 100 higher by 0.4%. You see the drive down lower at about 10 a.m. this morning. From there, we're up a solid 100 points in the NASDAQ 100. We're up by 90 points on the session, or 0.4%. The Dow trading lower today. UNH trading lower in a big way on news-driven event. Dow off 0.5%. The Russell off by 1.1%. Bitcoin up $880 at 119,000. Ethereum, how about Ethereum? Up by 4.5% to 37.56. Crude trading higher by 92 cents. A little bit of a two-way market today in crude. You drive down to lows of 65.40. We're back above 66 at 66.18 right now. And we jump to the all-important notes and bonds and dollar. The 10-year lower by 7 ticks right now. Okay, we got a 10-year yield that is right near 4.4 right now. Let's pull it up exactly. 4.41. Okay, the 10-year is at 4.41. You jump over to the dollar, and we got dollar weakness continuing no matter what happens to yields. I know I've said it many times, okay, if you've been listening, but you haven't been, if you have not heard it yet. No matter what's happening with yields right now, you have dollar weakness. Okay, this run that we just had, when you were at 96.37, the 10-year was at 4.19. The 10-year is at 4.41. So we're up 21 basis points. And meanwhile, the dollar gave it all back just like that. So you've been selling the dollar. And even with a weak dollar, gold's selling as well, down by $22 at $33.75. Now, with that said, gold's in the consolidation right now, okay? By digesting a 1-to-1, A to B, C to D, perfect move. Folks, what do they say? No such thing as coincidences, right? When it hit that run, when you hit 33.63, yeah, we have a spike high at 35.09, okay? And yes, higher prices are definitely possible. I still think the dollar is probably going to 90 at some point in the future. But gold needs to consolidate. You just go from 2,000 to 3,500 in the span of what? Barely over a year? And that's not even cherry picking the low on gold. I know we're going a little bit big picture here to kick off the program. Cherry picking the low would be 1,600 in 2022. You could take the lows of 1,860 in 2023, but this run really began in February of 2024. And yeah, you want to see how consolidations work? That run that began, okay, in February, because you can extend this box a little bit further from the breakaway. You break away, boom. Not until February. That was a consolidation. You did break away, okay, but yeah, that could be higher too, right? If you go up to the tails, that was the break, man. February and March of 2000. And what were you in? You're talking about, is that 4 years? It's a 4-year consolidation area for gold. Woo. So we might be coming into an area when you get these huge accelerations, okay, because that area had gone from 1,100 to 2,100, right? You had almost doubled in price. Well, we just did almost the same thing. You went from 1,600 to 3,500, okay? If you take the lows that we had of November of 22. But even if you take where we were in October of 23, you just doubled in price in less than 2 years. So it's interesting to see the action because we got some dollar weakness this week. And gold not reacting favorably to that number. We're going to be talking to our man Tim Ward coming up later in the hour. We'll talk some gold as always. We'll get his take. And we'll go from there, baby. All right, we jump over to the VIX. So, you talk about a move, man. Right? No fear whatsoever in this market to step in front of a market that just keeps creeping higher. Now, we're coming into more tech earnings, okay, but we've gotten past one of them, as in Google shares, up by 1.5%, giving back a lot of the early gains, but still strong numbers for Google. You accelerate higher in the pre-market, you give them back on the open, but we're still up by about $3 or 1.5% to $194.35. Tesla, on the flip side of that, down by 8.2%. When you got Elon telling you that they're in for a couple, it's either a couple or a few. It's an important one. We'll find out what he said exactly. I'll pull it up. Some tough quarters, okay? And when he's talking some tough quarters, folks, he's usually one that's over-promising, under-delivering, and hey, that's cool. But yeah, they got some tough go-around. You hit 341, you're down by 8.3% right now for Tesla shares. Jump back to those Google numbers. Man, now, what I think part of the reaction this morning, okay, and you never know, it's buying and selling, right? The reason why did it trade lower on the open? Well, the reason why it traded lower on the open is because there were more sellers at that price on the open than there were buyers, and they finally found out where supply equaled demand, which was a lower price point than where it opened. They increased their CapEx to $85 billion, up $10 billion from February, okay? But it's even bigger than that because they were at a much lower number, and I think it was in the Bloomberg article, and I'll pull it up. I mean, this thing just keeps getting ratcheted up in terms of the CapEx, and it's not going to stop. It's like the Holy Grail is out there, right? If you're the first one to have computers that can do everything and robots that can be your assistant and your agent, and you have agents for every task in the corporate world, that's it. You're done. Now, that's not where it's going to be, but that's the race. And so CapEx is not going to slow down. You see, NVIDIA will jump to is trading higher today, but Google, how about $96.4 billion versus $94? Folks, they took in an extra $2.4 billion in 90 days. Okay, earnings, they crushed it. $231 versus $218. YouTube revenue, they beat 9.8 versus 9.56. This is all versus what was expected. $13.6 billion on Google Cloud versus $13.1. They beat by $510 million on cloud revenue, which percentage is a decent number. And then traffic acquisition, though, was higher as well. So, in light of that company being positive by, what are we up, 2.5% right now? 1.5%, up $2.40. Boy, you talk about being priced for perfection, man. I mean, they crushed it out of the park, but you know where they didn't crush it? They're going to be spending $10 billion extra dollars. Billion, with a B. But guess what? Who are they spending it with? NVIDIA, up by 1.6% to $173.50. You have Microsoft right now up by 1.1%. Amazon up by 1.5%. Stay tuned, folks. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Yeah, so Amazon, quite an acceleration this morning. A little volatility right now. Amazon up by 1.6%. You jump over to Walmart shares right now, up by 1.3%. On the retail, Target on the flip side of that, down by 1.3%. Kohl's is in a plan of its own, up by 9.3% or $1.15 to $13.45. And yeah, we'll add into the new meme craze, American Eagle. So American Eagle, was this AEO? Yes, AEO is their symbol. You know, the moral of the story is quick fingers, folks. Many of these equities, boy, you got to be so quick. Even in the pre-market, you see how many of those gains, right? This equity didn't get open until we were at about $12. Percentage-wise, we were $2 higher. What is that, 16, 17%? But yeah, nonetheless, Sydney Sweeney at the top of celebrity fame right now, and she's going to be doing a campaign for them. And the market thinks that that might be enough to squeeze the shorts, and maybe it is, man. And here's where, so that's a weekly on GoPro, okay? GoPro, you gotta love GoPro, right? Down by 4.5%. Now, GoPro, man, okay? Folks, if you weren't around, I gotta do like a mainstay regular video, okay, on GoPro. Because my dad used to tell the story all the time. And if you don't remember GoPro, okay, folks, you had GoPro when they went public. And I'm gonna have to get the details of this, okay? But that CEO, man, he was able to figure out a way to let them, to get them to allow him to sell those shares that he owned. And you see where this company goes. How about trading at 40 pennies? Let's see what we're talking about. What was this company valued at one point? This is going to be video game style math for GoPro. How many shares they got outstanding right now? And this changes, of course. 157 million. Right now, they're guaranteed valued at 233 million, but you can see it was just trading at 40 cents. And you were about up to 100. 157 million. Is that a $15 billion company? Yeah, $15 billion company. Right when you go public. 2014. Nice little... I mean, look at how these things, these are things, folks, that you got to be in the market. And I know I'm just big picture here, right? I'm shooting from the hip, but the more years you're in the market, folks, the more head fakes you see like this, okay, where when this thing's going to zero, you get a dead cat bounce, right? I mean, even, it reminds me of, okay, yeah, this move in 2022. Let's see if I can encapsulate. I can. Okay. 2022 began in the market, folks, S&Ps. I'll never forget this because this is how markets work, okay? The Fed began hiking. They began hiking in March of 2022. That's right. I'm talking about hikes, folks. 3.5 years ago, okay? Ooh, remember when it was transitory? People did not expect that 3.5 years from now we'd still be talking about where we are, but nonetheless. But the point is that by the time the hike had come, the market was already freaked out. We had traded from 4,800 down to 4,200, okay? What an exit opportunity you got for the last couple weeks of March before the floor really fell out and the S&Ps dropped 1,000 points from 46.31 down to 36.39, just shy, literally, of 1,000 points over the period of a few months. And it was a situation where you got to bounce, okay? And look at the volume. But nonetheless, it was a dead cat bounce. And you see those, to the likes of the GoPro. Just keep that in mind. Didn't even plan on covering it. But so often, and I remember that, what an opportunity to get out in this market, folks. The meme craze was everywhere, okay? And listen, you get out, you get back in. As in, I'm not saying that you run. The America's going to be just fine. We see it play out over and over, right? But what an opportunity to get out when the getting was good. And then, of course, we trade from 3,600 to 64. And listen, if you write it down on a longer-term basis, I'm not telling you to trade that on a retirement account, okay? But for traders out there, for anybody, it was a heck of a run, man. We come into COVID at 3,200. Okay, you're trading at 2,200 in no time. And you're telling me at 4,700, all right, we experienced volatility. Because this is one to study, folks. Okay, it really is. The way the market can just lull you in to thinking, 4,800 to 4,200. Guess what? The Fed is hiking. It's cool. The market knows that they're hiking. And we're going to trade up. And, folks, percentage-wise, you go from 41.29 to 46.39. Okay? You're talking about almost a 12% pop in 2 weeks. And then, boom, they kneecap you and drive down 20%. Okay, and I say they kneecap you. This is not some conspiracy. It's just how markets work. All right, you can't go in one direction forever. There's going to be pressure to the downside. There's going to be dead cat bounces. In the same way that right now, okay, we get bounces in the dollar. But they're dead cat bounces right now in this dollar. Okay, this dollar's got weakness all over it. You look at this chart, we have lower prices across the board. Every time it seems like we're going to get a little bit of strength, that strength just gets ripped out. Yeah. But, hey, GoPro, the meme stocks, alive and well, to put it lightly. So Google shares up by $2.50. And, yeah, Tesla shares right now, you just touched that 300 price point. It's an important area. You break below 300, that's where your volatility took place back in April, and you got about 100-point trade at $100 trading range, man, from just over 200. 200's where you chopped around last October, and we're approaching that area. Tesla down by 7.8% right now. All right, we talked a little bit of Alphabet. Let's talk a little bit of IBM. So, and this reminded me of, okay, folks, because Google, all right, Google had some great numbers. And if you look at Google, I'm going to pull up in the last segment of the show, folks, their search function. I got to find the article I talked about this morning. They still are growing search. But what's about to happen is everything's going to change. And it almost reminds me of IBM, right? IBM's still around. Google's going to be around. But the game is going to change forever, as in search, AI, all that stuff now. But IBM's having their own woes. Second quarter results topped expectations. But you're talking about here that software revenue was at $7.39 billion, and the market was looking for $7.43. That's the big one, folks. Okay? Hybrid cloud revenue, 16% growth. Gross margins, 83.9%. Did you hear that? Yeah. Now, I remember when they purchased Red Hat, okay? Gross margins, 83.9% in the software unit. Nothing like the software business, folks. But guess what? Expectations are everything. You're down by 8% right now. This equity just trades from 134 less than 2 years ago up to 296, but they're giving it back today, man. You're going to do it with volume. All right, folks, stay tuned. We'll be coming back with our man Tim Ord. We'll talk some indices. We'll talk some gold as well. Always a good conversation. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
And welcome back, folks. We have the S&Ps up by 15 points right now. We have the NASDAQ 100 up 106. And right now, folks, we're going to jump over to our man, Tim Ord. You can reach Tim at his website, ord-oracle.com, every trading day, and as well as right under the services tab, folks, at TFNN. He's got a couple of outstanding webinars. The 6 secret ratios every trader should know about. Only $149, folks. Check that out. We talk about some of these ratios when we're going to talk to Tim. And the secret science of market tops, also $149. And when you sign up for those, folks, you get them on your account page. You can watch them as many times as you'd like. And yeah, great information. Tim Ward, good afternoon.
Good afternoon. So, anyhow, let's get started here.
I like it. Right into it. Let's do it, baby.
All right. The first chart is a CBOE put-call ratio reading, and this is a 21-day average at the bottom. So that's basically a month of trading. Next one up is CBOE put-call ratio, equity put-call ratio reading, 10-day average, so that's 2 weeks. The next one higher is a 5-day, which is 1 week. So you got a month, 2 weeks, and so it takes a lot of different time frames into consideration. So what I did was when all three time frames hit into the bearish territory, which is basically 0.55 or lower. This one's 0.55, this one's 0.54, and this was 0.54. Obviously, the 21-day is the most important because that's the longest time frame. But we're into I marked with red lines, the times when all three of those book call ratio reading time frames got into bearish territory, and we're up in that range right now. And even though the market, this kind of hit, I don't know, late last week or maybe first part of this week, but the market's pushed a little bit higher. Tops are kind of hard. They can extend a little bit, really not go a whole lot further, but it takes time. Matter of fact, this is the back of, or the high of 2020, or actually that was a February high. That ratio on the 21-day there stayed there for about 3 months or 2 months, 2.5 months, whatever. And that's the reason why I had this big pink line there. So we can stay out. Can we do it here? I don't think so, just because we're heading into a seasonality period. Of all the quarters of the year, we're heading into the weakest quarter. And right after the weakest quarter is the strongest quarter. So this quarter, number 3, is heading into the quarter number 1, which basically starts in October 27th. And that's the strongest. I think it runs into first part of January or anyhow. So you go extreme weak to extreme strong. So we're going to see what I'm implying here. We're going to see some pretty big volatility over the next 2-3 months. So, but anyhow, we're at a high of some sort here. Let's flip to chart 2. This really hadn't said a whole lot over the last couple of months, but this is the 10-day arms. I talked about it before. Actually, I gave a webinar on it. And you get up around 1.2 is normally a bottom because that shows panic. 1.2 or higher on the trend on a closing basis. 1 day shows panic. If you get 10 days, that's quite a bit of panic, and that's usually where a bottoms form. But in this case, I flipped it, and so you get a 10-day trend below 0.9. A lot of times comes at high. So a 10-day, that's 2 weeks of kind of optimistic reading. So when the market is panicking, that's bullish. When the market is kind of euphoric, that's bullish or that's bearish. And so anyhow, I got different indicators to kind of tell a different story here, but this is kind of doing what the put call ratio readings are doing. Anyhow, I marked the times when we hit 0.9, going back, I don't know, it looks like about a year and a half, and it does a pretty good job of picking out that the rally is going to last or not. And we've been sitting in that range, below 0.9 for a few days here. So
and not to jump in, but every little spot on there has quite a little pullback, some obviously deeper than others. But check out that chart, folks. I know you're looking, but that is quite a chart, Tim, for sure. Yeah. So you got people kind of, you got too much up volume going into up stocks is what that says. So anyhow, so you got the sentiment indicator leaning bearish. You got no panic in the market here. You got kind of a euphoria going on.
So let's look at another one. And this is the...
Can I just jump in one more time? When you think about
Sure.
this fundamentally, do you, because I love the ratios and I love just the straight out, math, folks. And check out those webinars, folks, all right? But I do. I love, and we'll talk about, I'm going to ask you about the VIX as well. But when you look at, when you see that one, like we were talking about, right? And you see the trade that as it goes higher, and is that the one you just went back to the second one we were looking at. Now, when you look at, that type of a pullback, when you have it, do you think of, because in my mind when you were talking about it, the reason I started to say, well, I guess it makes sense because if everybody's already bullish, right, and they've all made the decision to buy, what's the impetus to go higher to a certain degree? Do you ever think about that? Because in my head it makes sense, as in where are you going to find more buyers? If everybody's as bullish as you can be, it's difficult to get that acceleration sometimes. Do you think about the fundamental side of that at all?
That's exactly how I think about it. Yeah.
Gotta love it. Awesome. Cool.
At some point, the buy signals run out. I mean, whoever's bullish has bought, and they're in. So you kind of have to stir the pot. You have to shake out some of the weak hands and have the strong hands buy them, and so that's so it's kind of an opposite. When everybody's pessimistic, chances are you're near a low. When everybody's really optimistic, and according to the sentiment indicator, going back to this one, everybody's kind of in the market right now because the put call ratio readings are all leaning towards the call side.
No, that's awesome, and that's why I love it, because I love the numbers which kind of tell it. But I love that it makes so much sense even in my own mind methodology wise. So please go for it. It's awesome. Yeah.
All right. So anyhow, so that's that. So you don't have panic here. You actually got optimism, according to the trend is the advancing issues over declining issues divided by up volume over down volume. So what that says is you got a lot of up volume going into the advancing issues to get that trend below 0.9. So that kind of says that everybody's kind of buying the up stocks here, and so at some point it's got to come to an end. So I'm thinking we're awful close. I sold out last week. Because I'm starting to see some bearish signs. But tops, you really don't want to be in a rush to short. And I may still end up shorting here, but it seemed like the market just kind of pushes fire and it gets into so I don't know, bottoms happen all of a sudden. Tops are kind of meandering. They kind of go up and they go up a little bit more, and finally one day they head down. What's already right?
That's it. Right? You take the stairs up and the elevator down sometimes, man. As we drift sometimes on higher. Okay, folks, we're coming back with Tim Ward. We got a lot more to talk about. Don't go away. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps up by 11, NASDAQ 100 in the green as well. We're talking to our man, Tim Ord. And don't forget, folks, many of these ratios we're talking about, some outstanding webinars right under the Services tab. And you can always reach Tim at his website, ord-oracle.com. All right, let's keep going, Tim.
All right, this is the SPX tilt ratio. Anyhow, in a nutshell, we hit, I do a RSI on it. So this is the equity market against the bond market. And so when either the direction gets stretched too much in one direction, you know, that's either the bond market way outperforming the SPX, or the other way around, the SPX is way outperforming the tilt. I used an RSI on it. It picks out bottoms pretty well. Goes down there. If you can see, it picks out bottoms pretty well. It picks out tops too. There's top there. Here's the daily daily SPX on the bottom ratio. And it's one of the reasons why I got on my long position. The RSI got up above 70, and I'm out in this position last week. The market has since pushed a little higher. Now you got the SPX tilt ratio, which is one right here. This is the window over here. You can see it's now starting making lower highs as the SPX is making higher highs. So you're going to have you got a divergence going on. So the upside's limited. How high can you push? You know, you're pretty much it from here. It may waddle around a little bit, but I think we're at a high. Usually, the best day to make a trade is usually on Fridays to make you sweat over the weekend. And so I'll see how tomorrow trades. But this is what I'm looking at. We're probably hitting a high in this vicinity. But downside's only, this is the monthly SPY. We did have a sign of strength through the previous high, so this is a breakout to the upside. That means the previous high should act as support. Support comes in around 610 or thereabouts on the SPY, so we just may pull back there and go sideways here for the next, I don't know, couple of months possibly. I still think the sideways move, the halfway move to the upside, I still think 740 is an upside target, but downside is not huge here. But it's a worthwhile trade to the downside, you know, for a week or two. And I may take that trade. I'll have to wait and see. Right now, I'm still on the sidelines. I had a few in last Tuesday on Basil. We were talking. I said at the beginning of the show that how do I pick out gold stocks? Well, I want to show that technique because I got quite a few actually emails asking for that. How do I pick out? You know, actually, you can pick out anything, but gold stocks right now, we're all coming off of major lows. To make it brief here, this is the XAU monthly chart. RSI is up around 70, well, almost 73. I marked times in the past when the RSI is this high, and all of them came at these short-term tops. So I think we're having a short-term top in the XAU. Having said that, this is how I pick out gold stocks. You always flip to a monthly chart. I started going down the line. That's kind of appetized. I didn't trade this one, but this is Aftermath Silver It's AAGFF. The chart goes back to, looks like late 2019. I put a Bollinger Band on it, and two things got to happen. You got to close above the mid Bollinger Band, which is right here, and you have to have a sign of strength. If you notice this little sign of strength right here, it's not huge. It kind of went up, came back down. This next one is a lot stronger. I didn't know we closed on that mid Bollinger Band, but I'm saying we did. And if you notice, you have to have a sign of strength through the mid Bollinger Band on the monthly chart, and that gives you the buy signal. Momentum rules the market, and so if you get momentum on the monthly chart, the weeklies and dailies all fall into line. Because if the monthly charts are on a buy signal, everything else is going to turn up with it, especially off a big bottom. But this gave a buy signal. Here's one that didn't really have a sign of strength off that low, but there's your buy signal on this one right here, which is looks like about 10 cents. But you don't have a sign of strength to keep going. So I don't think this stock, even though it's up 17 or better, somewhere in that vicinity, this one I would not hold because you don't have a sign of strength. I think I got another one here. Let's see. Okay, yeah, this is another one. This is still in the A's here. For some reason, my
ABBRF. Yeah.
Let's see here.
Abra Silver, that one.
Okay, right. Yeah, okay, same back in 2020. There's your buy signal. It's kind of a sign of strength, but the real sign of strength came afterwards. That's exactly what you want to see. So you're closing above the mid Bollinger Band. It's kind of hard to probably see on your network here, but
no, we can see it. The charts look good. Go for it. Yeah.
Yeah. So if you notice the volume's going up, it's things going sideways, and there's your buy signal. Here's a buy signal right here, big sign of strength that came back down. But once you get through them, most of the time you get through them, you never turn down. This one turned down a little bit, and basically got two buy signals, pretty much the same price. But as you know, you pass through there on a sign of strength, increased volume, and you did it again a couple of months later, or this year, looks like probably February, March. You got another sign of strength, but the volume went with it. The volume is still going.
Yeah,
and
definitely.
So anyhow, you got, it looks like, I don't know, call it buck 25, and so anyhow, that's how you pick it out. You got to have a sign of strength through the mid Bollinger Band, and that sign of strength's got to continue. If it doesn't continue, chances are it's not going to continue. So that's how you do it. So when do you get out? Well, there's actually, it works pretty well too, is the RSI of the monthly RSI also works out. So this stock's getting extended. Once you get above 80% above the upper Bollinger Band on a monthly time frame, a lot of times you'll at least have a consolidation the next month. Here you got in, say it's a quarter, and you got out here, that's $1.75, so that was a decent trade. But you got, if you can see here, you're 80% above the upper Bollinger Band. That would have been a sell signal. You could have got back in for, looks like about $1 or so. And it happened again up here. If you notice this candle right here, at one point get way above the upper Bollinger Band. If you closed up around that trend, you're 80% above the Bollinger Band. That's the reason why you would have sold up in this vicinity. So that would have been $3. And you've been out, and we're kind of having the same. Now you're 80% above the Bollinger Band. You're a little bit higher here this month, but now you're 100% above the Bollinger Band, and you got the RSI up around over 70. So you got two things. This is one I've been calling for a consolidation in the gold market, at least the XAU and GDX. This one will correct because it's extended. And the ones that haven't run yet may hold steady, if not move higher. But this one will probably correct some. How much, I don't know. I'll be watching on the next pullback what this one does. Because, the longer term, with all this volume coming in, there's something big going on later on. So, but you're too far extended from the mid-Bollinger Band. So, that's how you pick gold stocks.
I love it, man. Thanks for walking it through. And I was just going to say, yeah, quadrupling in price, right? From $1 last March to $4 right now. Maybe just digesting it before the next move. Tim, thanks so much for the conversation, man. Going through the markets as always. We appreciate it. Folks, check them out, ord-oracle.com, and check out those webinars under the services tab. Tim, we'll talk to you on Tuesday, man. Have a great week, a great weekend. We'll talk to you then.
Thank you. All right.
Thank you. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And man, this GoPro, I'm gonna have to do a whole hour, and I don't think I'm gonna do a whole hour, folks. But man, I was looking at so many articles during some of the breaks there talking about GoPro, and yes, Nicholas Woodman. Okay, and it just is like crazy in terms of when you look hindsight, of course, hindsight. Now, this company goes public at $24, folks. Okay, in June of 2014. It accelerates up to $98 by the end of the year. You were approaching 53, still well over the 24. The dead cat bounce, and then you're at $9 by then, and you're at 40 cents this year. Now, what's remarkable is that you have, he sold so many shares, man, got away with so much in terms of what he did. So first of all, they raised money for the IPO. Right in the IPO, he sold shares into the IPO at $24, and took in something like $86 million or something like that, But check out this one, all right? This story is from the USA Today, dated, let's get it, November of 2016, Yeah, and so this is talking about even, let's see. I got to scroll down. I got to get these numbers because they're amazing, folks. Okay, check this out. What this article is talking about is how much money the CEO has theoretically lost since the high. But check this out. He sold 7.3 million shares between June 30th, so that means basically July, August, and September of 2014. Remember that. 7.3 million, July, August, and September. And then another 10 million shares from September, October, November, December, the end of 2015, okay? But just the 7.3 million shares he sold for July, August, and September, folks, July, it was at a minimum of 36, it was at a minimum of 37, and then September, you went as high as 96. 7 million shares he sold. The company's at $1 now. And there's lockup stuff. He was donating to his charity. Buyer beware, folks, okay? Red flags everywhere, and then it plays out. Folks, thanks so much for tuning in. I'm coming back for the 4 o'clock update, and then I'll see you tomorrow morning at 9 o'clock for the morning market kickoff. Have a great night.